Looks like inflation in the United States is moving in the right direction, although still above the Fed's target. What happens next in your view?
Well, I think one or two, actually, now that we have two monthly inflation reports that came in slightly better than expected, have already actually reduced the probability of a rate hike to come, at least in September. Again, I think the issue right now isn't so much on how many rate hikes are left. I mean, although markets are still battling between 1 or 0 rate hikes, the issue is actually the market pricing after actually that it hits the peak rates. And that's really going to be next year, where I think markets are still very, very aggressive in terms of its pricing of around 4 rate cuts to come once we actually reach that peak rates. What we're seeing from the US data, not just really on the inflation front, which is still very high on an absolute level, but the US macro conditions remains to be very, very strong. The labor market numbers are still well above what we tend to see in terms of a long-term average. Earnings are still holding up reasonably well across US corporates. So I still think that markets are still, I would say, overpriced in terms of the rate cuts, and that's really where I think why markets continues to be at a little bit more of a lower momentum, despite the fact that CPI was actually better than expected.
Okay, but the narrative now is that this latest data perhaps means that the Fed can refrain from hiking in September. Do you think that's necessarily the case? Are the markets getting it right?
I think so. I think that at the very beginning, even without the CPI report, a back-to-back rate hike cycle was actually quite a low probability anyways. And now that obviously the Fed shouldn't actually surprise against what market expectation is, then I do expect that the September will actually be a hold. But again, I still think in terms of the inflation data, 2 months of a data relative to what we're seeing as a 2-year long in terms of very strong data, it's still not enough to justify for the Fed to actually call it an end. So we still look for a potential rate hike either in November or even in December if you actually see a renewed resurgence in the prices, especially due to the recent uptick in terms of the oil prices that is going to filter through to higher consumption prices that we're seeing across the US.